Boom. We got sound, right? I think we're good to go. All right, market is open. We got to get down to business. Let me know if we're good. Yes. Made a few adjustments. Audio just cut out. Guy had to restart everything. We're good. We're all set. And we're ready to rock. So we are now late. So we got the market moving. First bar of the day was about 70-point range. That's a beauty to see. 8:45, we got to get down to business quick. 8:45, we got US S&P Manufacturing PMI final. That's the read. At 9 o'clock, we got US ISM Manufacturing PMI. That's about it. This morning, we had US initial jobless claims, 7:30. That came in a little high, 241 compared to 223. And all right, I think we're good to go. I think we're all set, huh? All right, market inertia-wise. Now listen, the last couple of weeks we've been talking a lot about, it's been range days. Okay, now, yesterday, we had a little bit more, you look at that New York session bar yesterday, I mean, it's a little bit more representative of a trend day, but we're not in a trend market. So sitting here making big bets on big trend days, not probable and likely to cause you issues, okay, as far as probability on the success of the trade. So, for me today, same mentality as yesterday. I'm thinking, okay, channel scalps, range day, but probably a bit of a wider range day. I mean, we're opening about, 1.5%, or at least 1.4% as we say right now, up. So I'm thinking, okay, let's look for channel development, but they're likely to be a little bit wider, at least for the first 2 hours of the day. So continuation inside of the channel is cool with me. And let's see what we can put together. Yeah, that manufacturing PMI final read hits at 8:45, 10 minutes out. All right, guys, what's up? Number 2, good morning. If you press like on the first stream, press like on this one, because this is where we're doing it up. Christopher, good morning. How you doing? Pumple, old school. Scooby-Doo, what's up, guys? Welcome. JM, how you guys doing? All the regulars popping in. Bruce, what's up? Jude, how you doing? Higher high. Good morning, Kale, Antonio. Exposed, first day copy trading 3 evals. Let's get it. Good work. What's up, Debo? How you doing? All right, so we're getting a little bit of a pop and drop-esque move here off the open. Again, it's not incredibly volatile, but it's within reason, which is good. Okay, I'm not a huge fan of seeing 300-point moves off the open. Usually that means something's up as far as news. Now, something we should talk about in case this isn't, brutally obvious to you guys already. The market the last couple of days, here's what we've been looking at. We as traders like smooth volatility, right? We don't want the market to be dead. We want it to be moving, but we want the movement to be wide and smooth, okay? We're not in that market right now. What we're seeing is the volatility isn't dead, which is good. The range is holding on to like 25 or 30 through the entire stream, 2.5 hours after the open. But we're getting random tariff headlines with no warning, and it's causing big wiki bars. And I saw multiple people yesterday who really got hurt on those bars, because what happens is, if you have a problem with your copy trader, if your stop doesn't trigger, if for whatever reason you're using stop limit orders instead of stop market orders, which in this market, make sure you're using stop market orders or risk management. If you're entering with a stop order, that's when you use a stop limit. For risk management, use stop market orders. There's no benefit to using a stop limit order in my experience. There's already an obligation for them to give you the best possible fill that they can. Okay, the futures market is very heavily regulated. Using a stop limit, I think a lot of people kind of misunderstand that order as like a risk management order. It's really more of an entry order, a stop limit order. Okay, a stop market order is meant to manage risk. You don't want to get skipped over using a stop limit, which happens all the time, and then the entire purpose for having a stop to protect you from black swan events goes out the window. Okay, so I would encourage you right now, if you're using stop limits for risk management, go in and switch that order to a stop market. You don't want to put yourself in that position. It works 9 out of 10 times until it doesn't. All right, so now that we're on here popping, the institutional orders are pretty much getting cleared out. A couple more minutes, a couple more 2-minute bars, and we'll be all set. But again, at 8:45, we get manufacturing PMI. That's about 60 seconds worth of volatility at best. And then at 9 o'clock, ISM manufacturing PMI. Again, from there, it's pretty much free and clear. Again, Trump events 10 and 11. We'll see if he makes any statements. I would kind of doubt it, at least at the 10 o'clock event. That's just him attending the National Day of Prayer event. So I highly doubt he's talking tariffs there. And then at 11 o'clock, he has an intelligence briefing. So we'll see. But keep an eye out. Random tariff news is bound to hit at some point today, causing a lot of wicks. All right, so pay attention, manage your risk appropriately, but don't be scared to trade. We can't control those things. Part of the game, right? Being in trades when something hits like that is just part of it. Drink Biscuit, what's up? This is Central Time. Lucas, Sandra, Lurtifuse. You're here every day, though I still don't know how to pronounce your name. Chris, Jason, what's up, guys? Wrongly rightish. Good morning. All right, pushing into intraday lows here. Jeremiah, good morning. Keith, what's up? Welcome back. How you doing? Right, that's a 61 range bar. Volatility's pretty good here. Volatility's pretty good here off the open. I hope we maintain, again, between 25 and 70, I'm good to go. But between 30 and 50 is probably better. What's up, J-Tron? How you doing? Bob, good morning. Simple Trader, welcome back. Keith, appreciate you. Savon, good morning. How you doing? Welcome back. All right, if you're just joining us here again, we are just waiting for those institutional orders to clear up. Waiting for everything to get a little smoother. Then we're good to go, though. Again, we do have a little bit of news, so we'll kind of tiptoe around 8:45 and 9. Other than that, we're set. Pumple, is the Ninja Trader ATR indicator set to 20 by default? I'm not sure. I have it set to 10. Then, of course, that just means that value you set, by the way, is just how many bars you're looking at on the chart you're setting it. So on a 2-minute chart, if you set the value to 10, it's looking back 10 2-minute bars, 20 minutes. All right, we are pushing lower. Now, worth mentioning here, again, we're at, what, like 9, just below 19.9 currently. Yesterday's New York session high was 19,794. Okay, so we're still about 100 points out from yesterday's New York session high. So there's room, but pay attention. Okay, lately especially, we've been seeing the market hesitate around the previous New York session highs and lows. It's always kind of a thing, but lately it seems like that, along with the break-even point on the day, is seeing a lot of respect. At least a lot of hesitation, we'll say. Respect is kind of a different word than hesitation. Well, I know a lot of you guys were trading evals. Though a lot of them were Top Step, Take Profit Trader. Anyone moving from evals to funded today? I saw some of you guys yesterday were saying, actually quite a few of you guys yesterday were saying you passed evals during the day, so you must be funded today, huh? That's exciting. What's up, Josh? Welcome. Good morning. Got my first full payout on Apex, waiting for my first payout on Take Profit. Cool, good work. Good work, keep it up. Yeah, Take Profit Trader is cool because you take those daily payouts, once they approve it and move it to your wallet, and you request and they approve, well, you request the withdrawal from your account. They approve, move it to your wallet, then you request the payout. And by the time you're able to proceed with the payout, once they approve the actual payout, it's in your bank account as soon as you open the app, in most cases. Which is cool. Doug, trading funded today after passing yesterday. Ooh, good work. Doug, is that your is this your first funded, or are you deep in the game? Devin, Apex through code BIG. Went backwards on my 3 yesterday. That's okay. That's okay. You'll clean it up. Just stay disciplined. Don't size up to get losses back. That's a huge mistake. Honestly, guys, one of the bigger lessons, if you take anything away, one of the bigger lessons that I'd like you to try to keep in your head is that in almost every case, when you dig yourself a hole, which we all are going to do, have done, will do, and will do far in the future, when you dig yourself a hole, it always feels like, well, you know, if I just 5x'd my size and took one half decent trade, I'm back to break even. That's an emotional response. You're trying to fix the bad feeling inside of you. That's all you're trying to do. That's lizard brain talking, which is, by the way, has been heavily studied. Losing money triggers a very reptilian response in our brains as humans. And it's hard to control. It's almost impossible to control. And the only way to really control it, in my experience, is to have undeniable proof that, hey, when I do this thing, when I am disciplined, it works better, which is why getting the data is so crucial. But when you dig yourself a hole, it's been my experience in every single case that if you just trade well, you're out of the hole much, much quicker than you kind of felt like it would take when you originally dug it, if that makes sense. But that really only happens when you continue to trade well. Scrumptious, good morning. How you doing? Doug, not first funded, third try. Keep it up. You get to payout territory. Pat, I did just that and blew up my evals. Yeah, sizing up to get back a loss. Working on getting better at that. All right, well, we are into 845 territory. By the way, that U.S. manufacturing PMI final read came in at 50.2. The forecast was 50.5. So that volatility should be pretty much clear here within, well, pretty much already. Now, again, all that's really left is at 9. We get the U.S. ISM manufacturing PMI. So it's time to start looking for setups here. We're clear of the institutional orders. We're clear of news until 13 minutes from now. And it's not even a major news event. Other than that, we're all set here. By the way, just a heads up, for those of you guys who are trading Take Profit Trader, you guys know by now that Take Profit Trader, it's not like all news that you can't trade. It's specific news events, usually the ones that create more volatility, like CPI, stuff like that. Tomorrow, there is an event that if you're trading Take Profit, you cannot trade. It's at 7:30 a.m. Central Time, and that's the U.S. non-farm payrolls and U.S. Unemployment rate hitting at 7:30 Central, 1 hour before the bell. Okay, you are not allowed to trade that if you're trading Take Profit Trader, so avoid that. Otherwise, that's a rule break. Chris says, I have a couple Apex accounts that I use for my dopamine hits. Oh, goodness. My other evals and funded accounts are really limited to trades I can stand by. You know what? Here, let's rephrase what Chris said here, because I kind of get what you're saying. I do think there is a place to have, let's say your goal is like 20 Apex accounts, which is pretty much everyone's goal. Which, by the way, is going to vary. It's not like you're going to get 20 and then you're going to sit at 20 forever. If you're trading prop at the height of the bell curve of profitability, you're going to go through phases where you have 20. Oh, look, damn, I hit a statistical anomaly, kind of, more just drawdown, and I blew, 10 of them or all 20 of them, and then you get back to 10, 15, 20. It's a little, everyone thinks it's going to be a little smoother than it really should be. If you're at the height of bell curve of profitability, which should be all of our goal, which means balancing aggressive trading with responsible trading. Horizontal scaling, again, is the way to do that. But my point being, I do think there's a place for, if you want to trade like 10 or 15 Apex accounts responsibly, and then have 5 or 10 where you shoot for like big payouts, like you take on additional risk with the almost intention of, hey, I'm going to go through these more frequently, and every maybe third or fourth set, I'll, the stats will work out. I'll take good trades on all of them, right? I really don't mean just gamble them at all. But you take bigger size in 5 or 10 of the accounts maybe, and you shoot for bigger payouts with a higher probability of blow up in those accounts. And then you use the other like 5, 10, or 15 Apex accounts for your real conservative horizontal scaling mentality trading, where you're trading a bit smaller. I think there's a place for that. Now, again, there's multiple ways to approach prop. A lot of people, what they do, and it works for some people, is like you guys see, there's a new record being set at Apex for payouts, like every 6 months, it seems like, and they're just getting bigger and bigger. Now, obviously, if you're going for the record payout, you're gonna be going through sets of 20 Apex accounts. There's almost no way statistically to get there unless you're putting on a large amount of risk and willing to cycle through accounts, which is why I think the whole mentality around prop, like, oh, if you ever blow an account, you suck, is so toxic and a horrible mentality. Because, the people setting the records, which is kind of a different thing, like, I think if you're trying to set the record, it's kind of ego-driven, if that's your intention, okay? But a lot of the record setting is kind of happening on accident, seemingly. You're gonna go through accounts, okay? That's a different way to trade prop. Or you can scale horizontally and look to get more consistent payouts. But your expenses are gonna be higher if you're going for huge payouts, like $1 million, $1.5 million, $2.5 million payouts. You're gonna be hundreds of funded accounts in on Apex. Your numbered accounts are gonna be way higher than most people. That's just a different business model. It doesn't make you worse. It doesn't make you better. If you're blowing accounts trading prop with intention, it doesn't mean anything. It's just part of the business plan. So, like, I don't think a lot of people who, oh, this guy blew an account, he's awful, I gotta stop watching him or whatever. It's like, look at the way that they're trading, not how many accounts they've gone through. I think that's unfair. Some people just have a more aggressive business model. That's fine. The point is, are you getting an ROI on the fees? That's the point. Dan says, I agree. I know a few who spend 50K plus in hopes of making multiple payouts. So yeah, see, and the kicker there is going to be, are they spending 50K on evals and funded accounts and then gambling them on earnings? Or are they sitting patiently waiting, putting on good setups, and just waiting for maybe 25% of the time they get a set of 20 that hits, a little bit of a statistical winning streak. They win 2 or 3 in a row. They get a little bit of padding. They're putting on a lot of risk. And then they get a big buffer. They keep scaling. Boom. All of a sudden they're trading, 15, 20, 30, 35 minis per account, putting on tremendous risk. And when they blow them, they don't care because it's part of their business model. It's just a different way to trade it. And it frustrates me when people don't understand and they I don't know. Like I see people talking down, oh, this guy, you know, blew an account. Look at their business model. Don't look at their account numbers. Zachary, passed first Apex eval and pre-market, got 6 more right at the door. Finally. Good work, Zach. Zachary, whatever you go by. All right, we're still watching here. See if we can get a decent setup going. We're definitely putting in a range. Obviously, we have a flat top up here. Right ahead of 20K, by the way. 20,000, that is an S tier level, as we all know. Okay. All right, take a look at this chart with me. 2-minute here. Some of these levels are... So, okay. Let's do this. I'm not a big fan of drawing very aggressive trend lines like that, because they tend to not hold up all that well. However, we clearly have a flat top up top, which tends to tempt breakout. That's right ahead of the S tier level of 20K, obviously. Now, if we could get a third bear bar closing near the low with at least 40 points ahead of arguably where this downside descending support level would be, that would be absolutely be a setup for me. This 2-minute bar rolls over here in 7 seconds. And a little bit of an ugly wick, but that's okay. That would be the middle bar. This third bar would have to be very, very clean. ATR is above, well, it's at about 40. Well, mid-30s right now. Now, what's interesting here is when you have a descending trend line like this, I can also, I mean, you guys know what I'm thinking about, right? I can stop hunt the low of day and then push and still have room before the descending. I mean, that's kind of what I'm thinking about, descending support. So this is all very obvious. Let's clean this up. Let's see if the bears can put something together here for me. Yeah, we get ISM manufacturing PMI here at 9 o'clock. So we kind of got to tiptoe around that number. These little news headlines are they're pretty inconvenient. You know, I don't know if I actually mean this, because it's good to ramp up volatility, and it's like, so what? You got to wait a few minutes around the news event, but it's like some days it feels like it would just be nice if they released all of the daily news at 7:30 and just let the day play out from there. Obviously, the world doesn't operate on our schedule as traders, so I guess we gotta... we're coming into 8:58, news at 9. Hoping we don't see a beauty of a setup here. Yeah, we got a wick back up anyway. You guys see that? Look at that. Wouldn't have been able to put that on anyway. You get a wick back up inside of the previous bar's wick low. That tells an interesting story. Now, of course, we're getting the rollover here, but we got news 2 minutes out. Coming in here for a test of the intraday low. That low is at about 88.50. All right, there's some stops getting triggered down there. But again, we got news. Ah, it's too bad. It could have been a nice setup for us, but these pesky news events get in the way. Look at that volatility. Goodness. All right, 48.7. Forecast was 47.9. Came in a little above the forecast. All right, now, let this volatility clear up here, and then we are pretty much free and clear to trade as we please, aside from random tariff headlines, okay? So... Look at that big wick. Huge data differences between NQ and MNQ. This may be a Ninja Trader to think or swim issue. But look at that last bar. Look at the open of that last bar. Top right of your screen on the 2-minute chart, you see the open and how big the body is. And look at the last bar up here. You know, you got to be careful. If you're charting between two different platforms, I don't care what platforms they are, you will sometimes see differences in data. Now, obviously here, this is the MNQ chart, and here you have NQ, so that's also a factor. But oftentimes it's a difference between platforms. You know, that's another argument for holding off around those news events. Even if you like to trade news, again, I think another argument is sometimes you can't trust the data you're getting fed. I mean, you have to remember these platforms that we're trading on. Someone just built them. Obviously, they get improved with time, but some of these platforms, you know, they're buggy. Part of the game. All right, volatility is starting to slow. The data between the two has cleaned up. Look at those two wiki bars. That's crazy. So let's see if we can get a nice clean setup going. I mean, so far on the day, we essentially have a flat top and a descending support, which is a widening range. All right, so we'll see. I gotta tell you, I doubt that range is going to continue to form and still widen deeper and deeper into the morning. When you get 34 or 35 minutes into the day, like we are currently, volatility has a tendency to start on average to slow down. So I think it's improbable that we see this here. Like, look here. This flat top with this descending support, I think it's unlikely we continue to see this just get wider and wider. I think we probably come in, which is actually better because it offers more opportunity for setups for us. All right, coming into the 20 on the 2. By the way, 20 EMA on the 5-minute chart, which is more relevant, is at 19,950. Okay, rollover of this bar in 20 seconds. I'm intrigued. I'm quite interested. Let's get a nice clean rollover, ideally below 950. Roll over, push up to maybe 975-ish. There's the rollover. And then give me a nice clean bull bar close. And I would buy that rollover if we got that for a test of that flat top and a test of 20K. Damn straight. I want to see some stops get taken out up there. Even if it just pushes 10 points. Depending on the close of this bar, if we get a setup, that would be enough to push me to target if we could get follow through. So that's what I'm interested in right now. Let's see if we can get that. They're trying to pull this back, by the way, off that, you see? 20 EMA in the 5-minute. That's very psychologically relevant. A lot of people pay attention to that. Yeah, you can see those bears trying to pull that back. A lot of wicks here today. It's interesting. Oh, by the way, you guys remember that the trade idea I was talking about earlier? Obviously, we didn't get this one working out to test 20K. I don't care. That's fine. Whichever direction gives me a setup, I'm cool with. This descending support level that clearly the bulls are paying attention to. All right, slow it down, bears. Calm down. When we're going counter, like previous trend, like reversal sequence, I need to see 3. That's 3 consecutive bars, ideally similar size or growing. And that third has to be a very clean close. Plus, there has to be room for me to hit target before coming into this descending support. That allows me to stop hunt the low here, right? Because that line continues descending. I can stop hunt the low and it can push me through, ideally closer to target, without hitting that descending support first. Is it picky? Sure. It's a damn good setup for me, though. All right, rollover of this 2 minute in 15 seconds. ATR currently sitting about 42. That's good. That's good. 1 minute 15 left on this bar. Now, come on, Bears. Show me a little backbone. Give me a nice, equal, maybe slightly growing bear bar closing inside of these wicks. I'll stop hunt. And I should have plenty of room down toward target. "35 seconds here. Whether or not I enter relies on if the Bears can show me something here. All right. Take it lower down toward 880. 15 seconds. Big wick upside. Goodness, Bears. Show a little backbone. Come on now. See, this always makes it a little bit tough because you get that little doji in the middle. And then let's, 50 seconds left on this 2 minute. But if we just got a perfect close on this bar, I know from looking at all my data that this one is slightly lower probability than had we gotten a decent close on the last bar. However, if we were to get a decent close on this bar, rollover, beautiful close on the next bar, the probability returns if you still have room. which in a range-bound market like this, you get continuation setups less often because you have to still have room to hit target. 30, 40 points before you run into something obvious. Descending support that every bull on the planet right now is praying over. So, interesting. We'll see if this can clean up. Again, this could turn right back into that 20K stop hunt style setup. However, we got to be above the 20 EMA on the 5. It's a very obvious level. Currently, that is sitting at 19,947. By the way, listen, I know a lot of you guys already have, but if you haven't, please press like on the live stream. Helps out tremendously. I appreciate you doing so. You can tell very, very range bound this market is. Yeah, we're up 1.3%, but I mean, look at the candles. Anytime you get moving in one direction or the other, it just gets wicked right back. Tells you a big story. A trend day, it just looks entirely different. There's actually some level of confidence out of one side or the other that we're just not really seeing so far here today. Which, by the way, is not inherently bad. It's just different. You don't want to be trading, I should say, betting on huge breaks in a market like this, where clearly the probability of that happening is much lower. Last problem here is the 20 EMA on the 5. That's the last issue. Good morning, Sean. Going well. How you doing? Well, this is the holdup right now. Again, I really want to make it clear when I talk about like the 20 EMA on the 5-minute chart. I'm not like an indicator guy. You guys see my charts are damn near naked. The reason I put that on is because almost everybody on a 5-minute chart throws up like a 20 exponential moving average. It's just so common. So we got to pay attention to it. I'm only interested in an indicator if it offers a self-fulfilling prophecy, which to me basically means a 20 exponential moving average, volume-weighted average price, maybe a 10 exponential moving average on a 2-minute chart if you're really micro scalping. Other than that, it's about it. Range, but I don't even think of range as an indicator, it's just data. I guess they're all really just data. All right, still kind of struggling here. We need to push up toward 960. This becomes a beauty of a setup. 20 seconds to get that done. Let me close above that little high. Come on, bulls. All right, I will. I will get long there. We barely got the setup for me, so I will get long there. Average price, 19,955 and a quarter. My stop is down at 19,915 and a quarter. Take profit at 19,995 and a quarter, which is pretty much right where I want it. Okay, just at that stop hunting mentality where I can hunt stops to push me right to target if we get up there. But still coming into 20K. Okay, now we are pulling back here on the to respect the 20 EMA on the 5-minute chart. Take a look there. But we'll see if the bulls can end up holding that for me. Currently sitting about 10 points in the red. All right, come on, bulls. Let's hold that, really claim and hold that 20 on the 5. That's the hold up right now here. There's the test of the 20 on the 2. About 15 points in the red as we currently sit. 10. Back to green on the trade here. Just looking to get a push upside into that flat top. Maybe hunt a couple of stops, push me right into target, right ahead at 20K. I'm a big fan of the way that this trade is structured. Now we just leave it and accept the outcome. It's about 5 points in the green as it currently sits. Pretty light in the green though. $12 points, 11 points in the money. All right, 18 points in the green. Yeah, John, I'm not a big move to break even guy. I don't know. There are cases where I will do it. For example, like a static drawdown if I'm going for a big winner. with a low probability of hitting it. Maybe move to break even there. I'm not a big break even guy otherwise, because I know that it's been back tested extensively. Should you move stops to break even? And the answer in almost every case has been, it doesn't make the data look better or worse over a big sample size. It just makes it look different. So it really becomes a question of, do you need that psychological crutch, or can you do without it? I prefer to just do without it. All right, we are 27 points, 26 points in the green here. Again, target at 19,995 and a quarter. Let's see if we can get a couple of stops hunted up toward that intraday high. You guys can see this is the look right now. Christian, this is my favorite jam on the stream. I feel whenever this song comes on, it kind of annoys me, to be honest with you. But I let it rock. All right, we're like 20 points in the money right now. Again, target's at 19,995 and a quarter. We'll see if we can get that pushing up for a test. Maybe 25 points in the money. All right, we are 28 points in the green. I have no reason, 30 points in the green, no reason to manage early here. Need about 7, 8 more points to hit target. Again, 19,995 and a quarter. Here's a look up top. See if we can hit that. We've got a few stops, I know, just above 990. A little bit more of a push here. There's the rollover, beautiful rollover there. There we go. And we are out there for a winner. There's the push through 20,000, at least the attempted push through 20,000. Okay, and here's where we currently sit. So first trade of the day, winner, and that puts us up 2,683 bucks so far. Let's see what else we can grab here. Now I'm interested in 20,000's an S tier level. Okay, so I'm interested to see if we can kind of get away from there, honestly. because we've now triggered those stops. Anyone who had stops above high of day, above 20,000, I just used those as rocket fuel to hit target. Okay, and I actually got some decent fills because of that. That's all intentional, by the way. So now I'd prefer, now that 20,000 is kind of out of the way, at least after the opening bell, I'd prefer to move on and kind of get a decent setup away from this S tier level. That really was. I bought this rollover into here. I think that was my entry, right? Yeah, I wouldn't have bought this. I bought this rollover. You guys see this? We barely closed above this wick high. Just barely. Just barely. And that was a beautiful setup. You know, I gotta tell you, even had that trade turned out to be a loser, that setup there, the way that worked out, I don't mean to like toot my own horn. This is more about the trade, okay? The way that just lined up with my stop and especially my take profit right ahead of 20K, just above the stop hunting area, that was the trade I probably felt the absolute best about. That was an A+ setup, I would say, in weeks. That was my favorite trade I put on, I think. Again, even if it was a loser. That's the mentality I want you guys to kind of think about. Had that trade been a loser, I still would have been sitting here smiling because that was a beautiful setup. I'm just glad the market gave that to me. Zach, just passed eval number 2 for the day. Awesome. Good work, brother. Bumble, would you consider another long in this move if we get another growing bull bar? Yes, I would consider it, but again, 20K is just such an S tier level, and what I mean by S tier is it's like above a tier 1 level. A tier 1 level is like 18,000, 19,000, 21,000. S tier doesn't happen that often, but S tier is a test of 15,000, 20,000, 25,000. We had to make a new tier for those because they're rare. But when we test them, it's a big deal. And here we are right now testing it. But we're pulling back around 20,000. I'll be back in a few minutes here, guys. Don't go anywhere. right, we are back. I'm watching the charts. Don't you worry, we have another setup potentially brewing here. A minute 30 out from the close of this bar. And I gotta tell you, there's not really a lot in the way. So if we get a nice clean close here, that's the setup I might have to put on here. Pat, my 25K is now funded after that trade. 50K is close. Cool, good work. Now let's get a nice clean close here out of the bulls. I don't want to see too much of a growing bull bar. Well, I should say an outsized bull bar. A growing bull bar would be good. Too outsized would not. That tempts that rubber band snapback effect that we tend to see. $30 seconds left to clean this up here. We got the bears wicking this back. See if the bulls can step back in control here in the last 20 seconds. Better get ready just in case. Big wick. Here comes the rollover. No, nothing there. The wick is half the size of that bar. Nothing there. Scooby, have you ever found a reason to short the snapback? I have a setup that is based on that exact mentality. I named it the Rubber Band Reaper. The thing with that setup is it's a lot more, I think, maybe difficult for a beginner or even intermediate to like get it right, because it has to be really involved with contextually understanding what is volatility like, what are the news events that create volatility like, are they random or scheduled? How much does it increase volatility and for how long when it does? And then you have to get the ATR over expansion calculation right. It's less of a calculation, it's more of a discretionary thing. It's so advanced that it's almost not even. Well, it's a good setup, but I'll put it this way. It's not as good as my continuation and range setups. I'll put it that way. It's almost more too advanced to the point where it's almost not even worth it. Bucky, what's your rule for wick to body ratio? I don't have a rule, it's discretionary. There's no like, if it's, 85% plus body compared to wick, then I take it. It's not like that, it's discretionary, but that, I mean, is damn near half the bar is wick. There's just nothing there. You see here, the balance clearly was not in the bull's favor. You're getting a big old bear pullback. Hugo, what's up, big dog? Appreciate you. Need your opinion? Should upgrade my account, which is a 150K account, and take profit trader from a pro account to a pro plus account. Well, at some point, Hugo, are they giving you a choice, or are they telling you they're upgrading you to pro plus? Answer that for me. All right, Bear is clearly trying to put in a reversal sequence. Yeah, Hugo, so they're giving you a choice. So the split switches from 80-20 to 90-10 when you go Pro Plus. There's a few changes, but honestly, it's not that big of a deal to switch. So there's another thing to think about though. Your orders become live, okay? So I wouldn't expect that, unless you're trading huge size, you probably won't see much of a difference in executions going from the sim environment, which technically Take Profit Pro is, to Pro Plus, which is no longer a sim environment. You're getting real fills, your orders are going to market. If you're trading reasonable size, which around here we do, you shouldn't really see much of an issue. And in fact, you might have less glitches, because every once in a while you get kind of a glitchy thing going on in the sim environments that most props are offering. But they're pretty good. So really it's a question of, if it were me, you know, I go for Pro Plus. You know, that 90-10 split is nice. And it doesn't change much else. Now the question, Hugo, becomes, you know, is it going to mess up your current trading setup? Okay, meaning like if you have everything set with a copy trader and you're using a specific platform, if that's going to change anything about the way that you trade, then maybe it's not worth it. Like, if you had to trade 2 different platforms now, whereas currently you're copy trading all your accounts just fine, and for whatever reason, you know, now you have to switch based on the way you have it currently set up. Okay, so yeah, you would trade it the same. Yeah, then you get that 90-10 split, why not? Okay, guys, you know what this is kind of reminiscent of, huh? Yesterday, we saw this twice. You get this kind of clean. Now, this is a little more rangy. Okay, you get a little bit of a pullback, push upside, a little bit of a pullback, push upside. But it's pretty tight. It's relatively tight here, okay? So what you see a lot when this happens, again, we saw this twice yesterday, is you end up seeing this move start to flatten out and widen out. I would not be surprised at all if we saw that, which is the one reason that makes me a little bit hesitant to put on continuation, because I know that bears, if we look here at this example, this is very aggressive. I would never short this. That's so aggressive. Your timing has to be beautiful to the point where I don't think there's a lot of edge shorting that level. At least, I don't know. At least for me. But I know bears are looking at that at least. Psychologically, I know that they know it's there. So for me to get long on a continuation setup, I'm kind of... that entry would be toward the top of that channel, and I'm kind of running into the wind, so to speak. So let's just develop. I mean, it doesn't mean it's off the table. Just something I gotta think about. Kings, welcome back, brother. How you doing? Nico, on the last trade, I got in 9 points lower, but I didn't let it hit the take profit because I met my daily goal amount. Was that still acting out of emotion? I could have took 20 more points if I didn't, though. Well, no, don't think in hindsight. Let's just look at what you did in the moment. If you have a daily goal, which I think most people should have a loose psychological daily goal, I think kind of setting a daily goal of like, you know, $500 or $5,000 or, you know, $10,000, whatever. And then if you hit it while in a trade, you're like, okay, I hit my daily goal, let's get flat. I think that's a mistake. Scooby, I gotta disagree with you. Scooby said you'll never go broke taking profit. I know what you mean, but I gotta disagree. I gotta disagree. That's that gets, everybody teaches that so that everyone says that. Here's how you go broke taking profit. If your edge says, okay, when I put a trade on and I only manage in these two rare scenarios, for example, but my stop is 30 points, my take profit's 20 points or 40 points or whatever it may be. Let's say 30 point stop, 20 point take profit. You're running slightly negative reward to risk. Great. If you start taking profits at 5 points, but letting your losers run to 30, and your win rate doesn't increase enough, it will increase a little bit, but doesn't increase enough to make up that difference, you just went from having edge, having positive expected value, to going not only back to break even, but now you have a negative expected value. So you are going broke taking profit. There's a few sayings in the trading world that I think are very dangerous. But I know what you meant. But Kings, to answer your question, I wouldn't say you were acting so much out of emotion. The fact that you're asking that question makes me think that maybe you were, because you're questioning it yourself. But I think for most traders, if you want to set a daily goal, great. But only address your daily goal once you've managed your trade and you're flat and you manage it the way that you would manage your first trade of the day. Even if you weren't at the daily goal. So let's say your daily goal is $1,000. You're at $900. You put a trade on. You expect to make $400 on the trade. Are you going to manage it, 25% of the way in because you hit $1,000? No, I think you should manage it the same way as always, and then you get flat. You're up $1,300. You say, okay, I'm at my daily goal. Maybe I'll sit back in my chair, listen to a podcast. If a beauty of a setup comes along, I'll put it on. If not, I'm cool. If you want to do it that way, cool. But I think managing early just because you're at your daily goal is a mistake. You guys can see here, we're still putting in this ascending little channel. It's very aggressive to the upside. It's not that wide. There's not enough room to take profit in it, at least if you're trading any bigger than maybe 25 points. And the ascending level is very, very aggressive, and those tend, the more aggressive a level gets, the less probable I have found it to hold on each additional test. So when you get little things like this, usually I end up having to wait for it to widen out or break back upside. Michael, would that, you're talking about that doji up top there? I would count it if the two that follow were very, very clean. Discretionary there. ST, I think Steven, what if my daily goal is not and how much I make, but how many trades I take? I don't really think that way. The way that I think is I show up, I take what the market gives me. Yeah, you're gonna miss trades here and there, that's fine. Just try not to miss too much. Take any good setup the market gives you, any A or A plus setup, maybe an A minus setup here or there. But you gotta be honest with yourself. It can't be like a C plus setup that you're calling A minus. And when the market slows or you're like, I've seen this environment before, I don't have edge here, walk away. Or if you're like, you know what? Time to go to the gym. Go to the gym. You're a trader for a reason. You don't have to trade 6 hours a day unless you want to. Old school, would you ever move your take profit if another continuation presented itself before Ooh, this is a good question. That doesn't happen very often. Oh, that would be a very specific setup. That would have to set up just right. And you know what? I might just leave it on. If it's set up exactly the way you're saying, where I'm like 1 point from target and I get a second continuation setup that's just beautiful, there might be a world where I would just leave that trade on and treat it kind of as 2 trades. Sure. That's interesting. That doesn't happen really almost ever. But it's possible. David, what's up, brother? Hope you're doing well. Thanks for the last week's 90% discount code. Yeah, that's a great deal when Apex runs 90. Right now, they're 80% off, by the way. I'm 50% done with the evals, only trading micros and sticking to one strategy, which has edge targeting 1R to 2R. Beautiful. Beautiful. Keep working. David, you were very close to going full time. How's that coming? You still kind of in that boat? Nico with a C. That's good. All right, this range is still holding here. I gotta see this thing widen out. Either widen out or break. Honestly, I gotta tell you, a curl back downside I wouldn't hate. Although 20K is down there and I don't want to touch 20K again if we can help it. Rick, hey Nico, on your trade this morning. By the way, if you're just joining us, for context, here's where we currently sit. We've taken one trade so far today. We're sitting up 2,000, what is that? 2,683 bucks. Where'd your message go? Nico, on your trade this morning, did you give any consideration that NQ had put in a higher low? By the way, I'm watching this chart here. This is interesting, but you got to understand that I know bears are watching this. It's so obvious bears are paying attention to this little ascending resistance. Okay, did you give any consideration that NQ had put in a higher low, as well as was breaking the prior swing high? It was also the second bounce off yesterday's high of day support. Thinking about what you're telling me. Did you give any consideration that NQ had put in a higher low, as well as was breaking the prior swing high? Yeah, so I saw what you're saying. That it was kind of more subconscious, though, to be straight up with you. The way I explained it is exactly what I was thinking. That was just a beauty of a setup. You look back here. I bought this rollover into this bar. We get 3 consecutive cleaning up bull bars. A nice, beautiful, clean close on this bull bar. Above the 20 EMA on the 5-minute. We were struggling with that previously. We cleared it on this close. We closed right above this wick high. So I bought that rollover, took on a little bit of heat as we retested, and we pushed higher. My stop was 40 points lower than entry. My take profit, according to plan, by the way, was at 19,995 and a quarter. Right at where I could hunt some stop losses at the high of day currently, which is just below 20K at that time. And right before we come into 20K. I'll dive deeper. Maybe I'll make a video tonight and dive deeper into that setup, because again, that was my favorite trade that I put on. Not necessarily because of the outcome, but just setup-wise, the market offering me something. That was my favorite trade that I put on probably in weeks. The setup was just beautiful. Jeremiah, what kind of espresso maker you got? I don't know, man. You gotta ask the wife. David, I'm inching closer to going full-time every day. I've been diligently logging my data and worked out a few kinks. Target is still end of year. Cool, man. Keep it up. No, yeah. No, this is the trading stream. The OnlyFans, that's a different website. Okay, so that was a beautiful setup there, except for this, right? I mean, listen, I would have bought that rollover there that happened about 60 seconds ago, except, you know, I know the bears can make, really, you could make this argument in a few different ways. Probably more like this is how I would draw it. Just draw it how you think most people are kind of looking at it. I mean, right. I can't justify buying that rollover. And again, here you get this little pullback. Not that that's going to occur every time, but that is pretty representative of what I feel like the on that rollover, what the buyer-seller relationship is like. Get a bit of a pullback as you come in. I know bears are looking at that, so gotta hold off. Yes, Clark, thank you for pointing that out. ATR is dipping here. We're below 25, which is also something we got to pay attention to. Now, I know some of you guys probably have a question here. You're looking at the 2-minute chart. Well, this here. You're looking at this chart here, and you're thinking, well, why not short that ascending resistance, right? And it seems like it'd be a great trade. And I'll tell you what, in an eval, I would. But for real, in funded accounts, when we're trading seriously, or more seriously, I should say, I size up, I get more aggressive in evals just because opportunity costs, I don't want to spend all week in them. In my experience, the far higher probability setup is buying an ascending support that's clearly defined with 3+ touch points, or selling a descending resistance of the same quality, 3+ touch points. Selling ascending resistance levels or buying descending, like deep descending support levels, it's counter trend, and it's really tough to get enough momentum in the other direction to hit target in a lot of cases. There might be a little bit of edge there. I think there's probably a little bit, but not nearly as much as buying ascending support, selling descending resistance. Higher High is asking about taking partials. If you have multiple MNQ contracts, let's say 5 for example, will there ever be a case that you take profit for 3 to 4 and leave 1 to 2 to keep running? Yeah, if the question is, will you ever? Yeah, yes, but in a trend market. Now, I know that this looks like we're clearly seeing a trend right now. We're up 2% on the day, but I would argue we're still in a range market. We're seeing a lot of wicks. This trend looks clean, but in an actual trend market, the moves are even cleaner than this, believe it or not. This does have a lot of wicks. Previously, it was a very wicky morning. So yeah, the answer is yes, but when I have a reasonable expectation, I think, to do so, and that would be a discretionary call, and much more often or likely for that to occur in an actual trend market, which is a lot more rare, by the way, than a range-bound market, which is what we're seeing now, is a range-bound market. Market inertia is very important to understand as a trader, especially of futures. Good morning. Thanks for providing your knowledge of the markets. What's a rollover? A rollover is simply, here we are, look at this flat top. See this flat top? We're kind of struggling around the flat tops now. Interestingly, it would not surprise me at all if we start seeing that widening out where this move starts to flatten out a little bit and we start seeing a widening out now. You get this clean move upside, and then maybe we still ascend, but we start to widen out a little bit. Volatility kind of increases, but the directional move slows. We saw that twice yesterday. Okay, what's a rollover? A rollover is the close of one bar into the open of the next bar on any time frame. But specifically, I'm usually talking about the 2-minute chart. Eric says, Nico, you should put a frequently asked questions in the description. Nah. I don't mind answering the same things over and over. Listen, trading's hard. This is all very confusing to someone who's newer coming in. I think a lot of us here in the chat, you guys understand like the jargon and like the terminology but sometimes I think, like, as someone brand new coming in, the way that we talk has got to be confusing as all hell. So, if you ever don't know what I mean when I say something, just ask. If I see it, I'll answer it. You explained what trading is. Get out of here. Nico, I think only issue is ATR is below 25, else a great dip buy setup. It's a little tight for me on that channel. It's tough to get enough momentum going to hit take profit. It's just kind of a tall order out of the market. Now, I could lean into this and go negative reward to risk, which I am thinking about here, if this sustains. I think I opened a door I can't close. Can you tell me how to make $1 million in 39 seconds or less with only 10 bucks? Can't even afford a micro with 10 bucks. ATR is average true range. It's the average range of the bar based on the last however many bars. So for me, when I say ATR, it's the average range of a 2-minute bar based on the last 10 2-minute bars. Jeffrey, do you trade in 50K prop accounts or 150 or 300K? Is there an advantage to the higher accounts other than just more drawdown during the eval? They let you trade bigger size in the higher accounts, though I kind of, in most cases, the bigger size is kind of a carrot to dangle. Like, hey, look how big you can scale. And maybe you'll use it if like earlier in the stream, we talked about getting really aggressive. Having a business model where you do blow through more funded accounts in an attempt to go super aggressive, take really calculated good trades and try to just trade big. And then you blow accounts, you don't care, you move on to the next set and you try to get a big padding and take huge payouts. That's another way to trade prop. It doesn't make it wrong or better or worse, it's just different. So currently, Some of my Apex accounts are 100K static accounts. Some of them are 50Ks. My Take Profit Pros are 150Ks. The advantage to me going with the 300K Apex would be that would be just enough drawdown for me, I think, to trade a mini. One mini. For the way that I like to trade prop. The size. Other than that, it's harder to pass the eval. But it's a bigger carrot to dangle. So, listen, they're all just tools. Pick whichever one you think makes the most sense for the way you want to approach this. If you're like, you know what, I got a whole bunch of money to invest in this, I just want to I want to break the payout record. Well, maybe you go through a whole bunch of 300K accounts, spend a whole bunch on evals, spend a whole bunch on activation fees, and try to trade 30 minis, 35 minis, and get huge. Again, I gotta see this. This little grind upside it's very clean, but it's slow. ATR is tanking. As far as range, we're now sitting below 20. We're at about, well, we're at about 20 on the ATR. Again, my sweet spot is gonna be between 25 and 70. So once we break out of this little melt up, that should increase slightly, but we'll see if we can get back above 25. Peter, I passed 300Ks today. Cool, good work. My ratio right now, I'm running 40 points and 40 points. So 160 ticks each way. That's my current ratio in the current market environment. Doesn't have to stay that way, but it's been that way for maybe a month plus. Yeah, Frank, right now I'm trading 4 micros on the take profit 150Ks. Just waiting for this melt up here to make a move. It's just getting tighter and tighter and tighter. Coming into 20,100, by the way, which is a tier 3 level. I don't care too much about that level. Yeah, we are live daily, every day here on YouTube, 8:15 a.m. Central until at least 11 Central, at a minimum. Chris, those Apex 100K statics only list the daily drawdown of 625. Anyone know what the max loss limit is on those? The max loss limit is, well, if you remember, there's the 30% rule with unrealized loss, but that should becomes a little bit more into play in the early days of a static account. So you have to understand that. But if you're trading small enough, it shouldn't be an issue. The 100K statics, it just stays at 625 of drawdown below the starting balance, and it doesn't move, which is kind of nice. I feel like the Apex static accounts are kind of underrated. But I mean, the 50Ks are great. The 150Ks are great. There's a push. Beautiful. That might be a headline there. By the way, I don't care which way this breaks. I just want to see this thing break. Because this lack of volatility is killing me. Just one trade so far in the day, a winner, but I want to see what else we can get. All right, I'll be back in 2 minutes. I gotta go stop the wife from dumping all our money into Starbucks stock. We are back. Goodness, trying to get a breakout here of this little ascending range. ATR kind of getting propped up a little bit. You look up top, it's starting to get propped up a little bit. We stopped the descent. We're kind of back at nearly 20, but I really prefer that at 25. This is really interesting. We saw a lot of volatility off the open, maybe 60, 70 points per 2-minute bar, and now we're getting a clean grind. I mean, look at the 5-minute chart. It's a clean grind upside, but it's a tough grind to trade because this is not like a super strong trend day in a trend market. This is a melt up, which is, it's different. It's more, at least more difficult for me to trade. You know, you look at the market inertia. Saw someone was asking about market inertia. How do we determine that? Well, I like to look at the last week, 2 weeks of trading with a little more weight on the more recent days. The bottom of your screen, it's just showing the New York session. I don't show the Globex on there because I don't really care too much, right? Because we're trading the New York session. I want to see what's the New York session doing. It's been range bound because you can see the ranges on the bodies of the bars are small. Even if there's wicks, which tells us that it attempts to break one direction and then fails. That's what the wick tells us on the daily chart. Okay, now we've been seeing a little bit less of that in the last couple of days, but it's not like we've broken into some crazy trend market. A trend market is one of those markets where it's like the Nasdaq's up big 6 days in a row, and everyone's like, there's no way it goes up a 7th day in a row, loading the boat with short-dated puts, and then it goes up a 7th day in a row. That's a trend market. Those are like continuation setups all day. Buy any pullback into an ascending support that you see. I hesitate to use the word easy, but those are a little easier to trade oftentimes if they're clean. Okay, here we go. So I'm thinking about if we can break downside through very clearly any argument of an ascending support that the bulls would be looking at here and push through the 20 EMA with a good continuation sequence, then that would have me interested, but it might take an extra bar here. The 5-minute chart, you see the 20 EMA is currently sitting at about 20,030. Doesn't leave me with a lot of room, to be honest with you. Because this here is at 20,070. That's 40 points. That's 40 points. That's kind of tough. I could lean into negative reward to risk, which I'm thinking about as volatility comes in. You guys know when volatility starts to get below 25, even below 30, I might start thinking about it, but below 25 especially, which right now that ATR is at about 20, 19, 20. I started thinking about leaning more heavily into trying to procure a higher win rate, negative reward to risk, maybe 40-point stops, 20-point take profits, something to that degree. Because you got to quit making big, giant asks out of the market when the range is really tightened down and volatility is lower, unless you're somebody who takes like 4-hour trades, in which case, completely different story. Yeah, Skeptic, I'm using a 10. A 10 2-minute bar ATR. So it's looking back about 20 minutes. Christian, I'm curious, why not move stop and take profit together, say from 40-40 to 30-30? I absolutely could do that, and I might do that. I'm sure in the future we will see me do that. However, when volatility comes in, Christian, to answer your question, it's been my experience that rather than going like if volatility really dies, rather than going like a 10-point stop, 10-point take profit, where I'm risking, for me, I end up getting chopped out more often. And yes, Peter, I would increase the size if the market movement is smooth. If it's choppy, I would probably stay smaller and decrease the ratio. But it increases my risk of chop out if I just go really tight, like 10-point stop, 10-point take profit. So what I'll oftentimes end up doing if volatility is just a little too low for me to go like 1-to-1 reward to risk, is I might leave the risk at, maybe 40 points, maybe 30 points, and start taking profits at 15, 20 points, because it amps up the probability. Because you're within a certain range in the market, at least probability-wise, and as you go further and further out, as volatility comes in from the current price, further out from the current price, the probability of hitting that in the next, let's say, 5 or 10 minutes, gets lower and lower and lower, closer and closer to the current price. Okay, so the probability of a trade working out when you go negative reward to risk increases dramatically. And the question then becomes, okay, how do I put on good setups that give me just a few % edge at a minimum? So really the reason I don't do that, Christian, is because if I do that too tight, I personally tend to get chopped up a little more than I like. And I'm not, again, the word chopped out is overused, but that's what that is. That's what that would be. Most of the time when people say, oh, I got chopped up, they're just wrong on the trade. Well, bulls are trying to hold this 20 EMA on a 2-minute. I gotta tell you, this is not that psychologically relevant. Not a lot of people watch the 2-minute chart, so the 20 EMA on it is, I throw it up for context. I like to have something on my chart to give me some kind of feel. But, understand, like, this is the 2-minute chart again. That level there is, I don't know, if I had to guess, maybe watched 10% as much as that level there. This is the 20 EMA on the 5-minute, a very, very popular watch. All right, well, here's the break downside through that 20 EMA on the 2 minute. That's good to see. Now what we got to look at is the 20 on the 5. That's just below 20,040. So, I mean, a decent close down near 20,060. Could I put that on? Yeah, I could put that on. However, then we're looking at 20 points ahead of the 20 EMA on the 5-minute chart. Yeah, you know, it's something to think about there. I'm thinking about it, but going in, you need to understand that that's a negative reward to risk trade, which is not bad. It's just different data. And naturally, the win rate will be a little higher. Of course, it's not going to be 99%, but it creeps up a little bit because the futures market is priced pretty efficiently. Okay, 20 seconds out here. Yeah, we're getting a wick up here out of the bulls. There we go. A little bit of a lower close. 10 seconds, down towards 60. We're wicking back up on the rollover. You guys see that? Had that closed at the low or near within a few ticks of the low, right around 20,060, I'd have slapped that on, looking for 15 to 20 points. Negative reward to risk, okay? But what we saw is a push deep, which left me less room. Left me about 12, 15 points of room before the 20 EMA on the 5-minute chart, and then we wicked back upside. Which forces me to hold off, unfortunately, on that one. Yeah, when I started, I didn't know a single trader in real life. No one. In fact, I didn't tell that many people. Of course, aside from my now wife. But anyone outside of her who I did tell had never bought a stock in their life and told me not to try because it was a scam. It was a waste of time. You know, don't all those guys, aren't they just gambling? Don't they just all lose money? Their only experience with it is what they saw in the news in the dot-com bubble. And by the way, a lot of those people were just gambling. They weren't traders. So I'm sure a lot of you guys are hearing the same thing. Just consider the source. You know, you're never going to hear someone who actually has trading experience tell you not to try. You got to consider why they're telling you that. All right, this should be coming pretty obvious to you guys. We can get a nice little continuation sequence downside, meaning this bar closing in 55 seconds from now, roll over, and get a nice push downside and close below the 5-minute 20 EMA. Similar setup to what we took earlier. I would take that rollover short if we could see that. All right, retesting the 20 EMA on the 2-minute, though, you know, Really, we're testing the 5-minute 20 EMA, which is more important. All right, Bears. Come on, let's break downside through that 20 EMA on the 5. And by the way, you know, we got to consider 20K, right? If we can get a close down right around maybe 20,035, 20,030 on a nice continuation sequence downside, I'd probably be looking for 20 to 25, maybe 30 points on that trade, negative reward to risk. But obviously right now the bulls are trying to take this higher, so it's not quite there yet. Yeah, this ATR, we're back below 20 on the ATR. 19.99, bottom of your screen there. You know, the benefit the last couple of days is at least today, we're not having to deal at all with that break-even point on the Nasdaq, which is nice. That's been a pain, but today our break-even point is kind of that 20,000 level. Obviously stuck around there for a little bit, but not as long as I might have expected, which is actually a good thing. Once you take out those stops, which we took advantage of on our trade today so far. Once you take those orders out, there's not a lot there that's left. They've all kind of executed, and the level becomes less and less important. But psychologically, obviously, that's still an S tier level. What happens with ATR below 20? Is it good for your trading style? I would say, you know, it's neutral for my trade. I prefer it above 25, but as far as like data, I'd probably call it neutral because then we can just lean into negative reward to risk, which naturally is going to have a higher win rate. Again, never perfect win rate at all, but it creeps up. Obviously, if you go 1-to-1 reward to risk, you're going to have a slightly lower win rate than someone who goes 1-to-2 reward to risk. That doesn't mean you have less edge or more edge, it's just different data. All right, here we go. Let's see if we can come back in for another test of the 20 on the 5-minute, which is currently down at 20,040. All right, 10 points out here from the test of the 20 EMA on the 5-minute. Bulls are really trying to hold that. You take a look here at the 5-minute chart. We haven't gotten a true test. We've tested it plenty of times today, so that's kind of out of the way. You guys remember that probability concept we were talking about yesterday, maybe the day before? About days where you never test the 20 on the 5. It's a very low probability that that holds all day. Here's the 2-minute. Lee, welcome back, man. How you doing? Stuck in meetings again. Can't you just tell them the market's open? Schedule it for the night? What's up with that? Who schedules a meeting at... Well, the Nasdaq's trading, man. All right, that ATR is still dipping. We're at about 19.4 here now. Again, not a big deal if we can get a clean setup. You gotta remember that 20 EMA on the 5 minutes at about 20,040, maybe a tad higher at this point. Here's the test. Bulls are really holding on to that. You know, it's also, I gotta tell you, it's kind of turning into a little flat bottom here as well, right above that 20 on the 5. I think it's not unlikely we see this at least attempt to break downside through into the 30s. At least to give the bears some, and then from there it's 50-50. We gotta see some kind of setup develop though. All right, there's the hard test of the 20 EMA on the 5-minute chart. Here we are, dipping into the 30s. Here comes the rollover of this 2-minute. Okay, now this next bar becomes pretty important for me. But if it grows too much, then we're coming right into 20,000. The inconveniences of trading around an S-tier level. Range on that last bar was 23. If we got an equal sized bar, 20 plus, that puts us right into the 20,020 region. Leaves me at best able to take profit maybe at 20, at 15 points. I don't know. It's kind of a tall order. Reasonably, we look at this chart here. Look at this one with me. Reasonably, we don't, you know, the only reason that there would be stops loaded up below 20,000 is based on 20,000 itself. There's really no self-fulfilling prophecy technical reason why there would be stops there anymore. We already used up what was there today on our long trade to push us into our take profit. So we got 45 seconds left on this bar. Let's see what happens here. Here's the retest, back test, I should say, of the 5-minute 20 EMA. Again, not uncommon to see that. But 20 seconds left here. This is turning into a shrinking bear bar. You see on the 2-minute here. Get a bit of a wick back upside out of the buyers here. Here comes the rollover a few seconds out. Yeah, that's okay. That's okay. I actually prefer to see that. Otherwise, that's a hard decision to make. I gotta tell you, if that closes down around 20,020, that's one of those decisions where it's like, well, there's probably a couple percent edge there. You know, if I could take that off 15 points coming to 20K. But I know that 20,000 is kind of a zone. It's not an exact number. It's kind of a zone between 19,990 and 20,010. It becomes a tough decision to make, so I'm kind of glad I didn't have to make that decision, to be honest with you. But if we can get a nice continuation setup down beneath 20,000, that decision becomes a hell of a lot easier. But right now, we're kind of fumbling around with a retest of the 20 EMA on the 5. You guys see that? Very common to see that after you get a break. Okay, so we're now clearing downside through that 20 on the 5, which is good to see. Now I need to see consecutive bear bars. 2 would be enough for me here, since we've got that little bit of a zoomed in downtrend going on. Obviously, this is still a range market, I would say. We're kind of getting stuck around that 20 on the 5. Market's having a hard time making a decision. Putting in a doji on the 5-minute chart currently. Real bit of a push into those lows. Yeah, volume weighted average price down toward 19,970s. Thank you, Scooby. Plenty of room. If we can get a nice little setup here coming down through 20,000. Volatility still below 20. It's at about 19. What's up, Danny? Welcome back. How you doing? All right, there's a nice little close on the 2-minute chart. Now, you got to consider a close down below 20,000 would be an outsized bar. ATR is just below 20. A close below 20K would require at least a 25 or 30 point bar. These kind of markets are the markets where like you get really close to setups a lot, and there's a few things that go on. I can put those ideas to rest. You gotta stay disciplined. Yeah, Danny, everything's explained on the page. If there's one option, 3 months, you and I will get on the phone for 30 minutes every 2 weeks. We'll figure out your approach. We'll figure out your business model for trade and prop, which is really who it's geared toward. Figure out the expenses, the goal, sizing, setup help, psychological stability, all of it. We'll just do it all. We'll get down to business every 2 weeks on the phone. Oh, not to mention, I'll be watching your data the whole time. I'll just give you access to our data tracking software. I had TraderView build us some software. All right, coming in here to 20K. Again, 20K, that's an S tier level. These tests don't happen that often. We're talking 15,000, 20,000, 25,000. Those are the S tier levels. 20K is like the S tier level though. So a lot of decision making going on around here. All right, here comes the rollover here. This bar turned it into a doji. Beautiful. There's a pop down through. A retest here is not unexpected. Got a few stops there, not a ton. We already took out those orders earlier in the day, and we used them on that trade we took. Gonna be just some decision making here around 20K. All right, 55 seconds out from the close of this 2-minute bar. Let's see what we get here. All right, now, Bears, calm down. Calm down. I don't want to see this bar become too outsized. Oh, it's growing, it's growing, it's growing. It's tempting fate. 30 seconds left on this bar. The range on this bar is now over 30 points. 35 points. Goodness, that is double now the ATR. Yeah. Now well over double. We're nearing into triple the average bar size. Now, if that bar had closed up at about 19,990, I'd slap that rollover all day. But here we're tempting the bulls too much with too cheap a prices too quick compared to the current volatility. So we'll see if the bears take it lower. But for me, the probability just shifted. The lower that went, the probability gets worse and worse. Now again, you got to base on the ATR. Okay, and here we are getting a nice little push downside, which is fine. I made the right decision there for me. See those bulls step in, wick that baby back up very quickly. You're tempting that rubber band snap. Justin, with that move past another 50K. Good work. All right, this 19,950, again, tier 4 level, not concerned about it at all. 20,000 is much more of a thought here. Now, these two bars, you know, it's a good actually thing to see because that's going to help widen out the volatility here. At least it should for maybe 15, 30 minutes. Which is good because that volatility had come in below 20. But you see these bulls step in. That's what I mean when I say it attempts that rubber band snapback. Now, this is happening a little more slowly than it can. Okay, but you saw that second bigger bear bar shoots down, wicks higher. We saw a very quick wick back up, and now we're seeing the rollover bulls tempting, or I should say attempting, a reversal sequence here. This here, by the way, this is one of those scenarios. It's higher volatility now compared to what we were seeing, of course. You see the size of the bars. This is one of those scenarios where if you're a bull who's a low probability, high reward to risk trader, this is one of those scenarios that you can think about. Again, low probability, high potential reward to risk. Yeah, Jeremiah, that bar was way, way too outsized. That's what we're talking about here. Well, if you're just joining us here, here's where we're currently sitting. We're sitting up 2,683 on the day here so far. You guys know what I'm looking for, right? I mean, when we get those big downside pushes, it's not uncommon at all. Again, we are in a range market. Look at the bottom, right? This is not a trend market. Market inertia says expect more range movement than trend movement, even though today we're seeing what looks to be like trend movement. I would say it's not. This is more of a range day with trends inside of the range. Okay, so that's what I'm thinking. Continuation inside of ranges. And channel scalps, if they develop, we have not really seen any clean channels develop yet here today, though, of course, we may as volatility continues to ideally down not too much into the remainder of the day. Now, ATR currently, that propped it up. We were below 20. That teal flag at the bottom of your screen, we're now at 24. Okay, so that's good. You know, when we're below 20, again, my ideal range is going to be 25 to 70. We dipped down below 25, and I lean more heavily into negative reward to risk. If that ATR, which we have seen, by the way, a couple months ago, we were seeing this. When that ATR dips below like 9, or I'm sorry, like 10 into the 9s, for me, it's kind of time to walk away when that happens, just for context. So, anyway, again, this is where we currently sit. By the way, Apex, 80% off, single day pass, which, by the way, I get a lot of questions. What does that mean? It means you can pass the test in one day and be funded tomorrow if you so choose. But you don't get daily payouts with Apex. You have to wait your 8 days, but Apex is good for scaling accounts. They let you go to 20. All right, take profit trader, you can only have 5, but the trade-off is you can take payouts every day. Okay, if you're more into that, take profit trader has no activation fee right now, plus it's 30% off. Both companies use code BIG, B-I-G. That'll give you the best deal always. All right, guys, hope you have a good rest of the day. Stay disciplined, let the market come to you, and when it does, slap your setup with no hesitation. I will see you guys tomorrow, 8:15 a.m. Central Time to finish out the week strong. Have a good one.